Yes, sir. Yo, what is going on, guys? Welcome to another video. In today's video, we are going to go over everything that happened. There was a lot that happened today. So we're going to go ahead and talk about the CPI, all the data, all the news and everything that came out. And then we're also going to talk about what to expect going forward in the stock market. So let's go ahead and get right into it, folks. So first off, today was one of the craziest days in the stock market, folks, that I have ever seen in my life. I was just staring at my portfolio in disbelief. I'm like, did we really just go down 2 to 3%? And then we ended the day up 2 to 3%. I'm like, what the heck is going on here? It was crazy, but it was dope. It was really cool to see. So yeah, guys, today was one of the craziest days in the stock market I've ever seen in my life. I've never seen anything like this. And so let's just talk about what happened. So you guys know the story by now. I'm sure you've seen it all over the news and Bloomberg and everything. So CPI came in and it was higher than expected, okay? The September month over month came in at 0.4 versus the 0.2 estimates. The year over year came in at 8.2 versus the 8.1 expectations. And then when you look at core came in month over month 0.6, and then year over year for the core came in at 6.6. Once again, all of these beat expectations. Inflation came in hotter. That is absolutely not good. And the market showed that in the pre-market because the market absolutely plunged. As a matter of fact, you saw the S&P 500 go to 3,400 in the pre-market and even when market opened. But then guess what? Something insane happened. All of a sudden, the market opens. The S&P's at 3,400. All the bears are screaming with joy about how great their shorts are looking. And then something incredible happened. You literally ran out of sellers. The sellers just ran away. It was over. And an hour into trading, the market not only went up 3%, it went up another 3%. It was the craziest swing I've ever seen. The market went from being down 3% to ending up being flat and erasing all of those losses to ending up going up. You literally saw the market, S&P 500, go from 3,400 to almost 3,700 in one day. You talk about volatility. Now that is some freaking volatility. That was absolutely incredible. So the other thing I want to bring to you all's attention is pay close attention to the Cleveland Fed, because the Cleveland Fed has accurately predicted every single CPI reading for like the last literally the entire year. Like, it's insane how accurate they've been. And that's somebody that I look to when I look at how CPI is probably going to end up shaking out, because they've just been so gosh dang accurate. So make sure you check out the Cleveland Fed. The other thing I want to say is right after the numbers came out, I immediately went to the Fed Watch tool. For those who don't know, definitely make sure you check that out. It's called the CME Fed Watch tool. You can literally Google it and it pops right up. I went to the CME Fed Watch tool and it immediately showed the probability of a 75 basis point. And that probability went from 80% to 90% to 96%. So what exactly does that mean? Well, that pretty much means that we are absolutely almost 100% going to get a 75 point basis point rate hike. That's exactly what's going to happen. And so what do these numbers in the CPI tell us? I understand that the market rallied. I understand that the bulls took charge today. I get it. But you have to remember the overall story, folks. You have to remember the overall trend of what's going on. And one thing we know for a fact is we are still in a bear market and things are still looking bad. And the Fed is probably going to get more aggressive. And I'm going to tell you why. These numbers tell me the fact that inflation came in hotter, that the Fed's job is still far from over. Now, what does that mean, guys? Well, here's what I know, okay? If the labor market doesn't slow and inflation doesn't slow down either, I suspect that these Fed rate hikes will continue into 2023. That's right, folks. You heard it here first. If things don't get better, what does the Fed want to see? They've already told you. They want to see housing slow. They've already said that. They want to see inflation slow, and they want to see unemployment go up. They need the labor market to slow. That's what they need, okay? So just don't get caught up in that. Now, I also saw something else, too. If you look at the Fed funds terminal rate, there are some people who are suspecting that it could go to 4.75%, maybe even up to 5%, as crazy as that sounds. And I can tell you guys right now, if the Fed gets more aggressive and they start doing more rate hikes, the everything bubble will absolutely be destroyed. Because believe it or not, guys, there was a tweet by Michael Burry, and he's right about this. Michael Burry said that there are still a bunch of clown trash stocks that still have insane market caps. And he's right. And I can tell you guys right now, if the Fed continues to be more aggressive, that's going to reset real quick. That's going to get wiped out. And I absolutely think that that's going to happen. Now, here's something very interesting also. The S&P 500 this morning hit 3,493. That's only 100 points away from erasing the entire post-pandemic bull market. If the S&P 500 goes down another 100 points and goes to 3393, which I think it will, I absolutely think it's coming, that would mean that we have erased the entire gains that were made from both 2020 and 2021, which means all those YouTube gurus, those fake gurus who popped up out of nowhere and had you guys buying all these trash stocks. In my opinion, that means they should lose all credibility. I mean, that is just insane. The absolute wealth annihilation that these clowns on YouTube have caused. It's absolutely insane. But the bottom line, folks, that I want you guys to get from this video, do not let this bear market rally trick you. As a matter of fact, let me go ahead and discuss what happened today, at least what I think happened today. I think what happened was a typical technical bounce. The market just ran out of sellers. People, and you probably have some short covering going on too, but it makes perfect sense. This is a good explanation to you guys of how vicious bear market rallies can be. What you saw today was a bear market rally. We are still in a bear market, but we had a vicious, mean rally to the upside, because think about it, guys. The last 6-7 days, you just had straight selling. That's not how markets work. Markets don't just go straight down. So you should have expected that there would be a bear market rally. However, do not be fooled. That does not change the overall trend. And I'm here to tell you guys right now, we are not out of the woods, folks. You still got some very serious catalysts coming up, okay? You still got some very serious catalysts. You have the bank earnings. Matter of fact, you have earnings season, first off. That's literally happening this month. But tomorrow on Friday, you have the bank earnings that are coming out. And that's going to be extremely important, because the big bank earnings are going to say a lot about the economy and everything that is going on. So you're going to want to pay attention, and the market's going to be paying close attention to what these banks have to say, because obviously they're the banks. It's their job to know what's going on in the economy. They need to know this stuff. And everything that these CEOs are going to be saying tomorrow is going to be very telling as to how things are going to look going down the line. So you're definitely going to want to pay attention to that. But yeah, guys, do not get fooled by that. The other thing I want to say too, do not get fooled by this bear market rally. But the other thing that I want to say as well is pay close attention to this Bank of England drama, okay? Because like I said, this is literally a game of chicken. Now, we got some rumors today that the UK Prime Minister is thinking about pivoting on the tax cuts. So we did get that news today. We'll see. One thing I can tell you guys is somebody's going to have to bow down. I don't know who it's going to be. I don't know if it's going to be the Bank of England or not, but somebody is going to have to bow down. So pay close attention to what news ends up coming out tomorrow regarding what the Bank of England said. Because remember, the Bank of England basically came out. The governor of the Bank of England came out and said, you guys have till Friday. He's talking to the pension funds. He said, you guys have till Friday to figure this out, because we're taking our support away. We're done with the QE on Friday. And like I said, we don't know what's going to happen, but it's going to be very interesting. And again, that is a huge catalyst that can move the market. And you still have the drama going on with the Japanese yen. Remember, Japan owns, they're the largest foreign holder of U.S. treasuries. So if their Japanese yen, their currency, keeps weakening, they could be forced to sell U.S. treasuries, and that's not going to be good for the market. So just want to make it very clear, guys, that we are not out of the woods. You still have some big catalysts coming tomorrow. Now, one thing I will say is, some of you guys might be asking, Echoes, did you buy stocks today? Yes, I did, and it felt good. When the S&P hit 4,300, I was like, all right, I got to buy. I had no idea we were going to get this insane push to the upside. I had no idea. And I got to be honest with you guys, it was really hard for me to buy stocks today. It was, because psychologically your mind just plays tricks on you. It's like, man, there's just so much red. There's so much pain. You know, what if we go lower? What if this happens? But I just put my head down. I just say, you know what? Even though I'm throwing money into the fire pit, I'm perfectly fine with it, because I'm a long-term investor. And I know that down the line, these individual stocks that I bought are going to do well. So yes, guys, I did go ahead and I did buy some individual stocks, specifically in the market crash portfolio. And I feel great about it, especially with that huge move we got. I did not expect that, but that's where we're at. Okay. So in terms of other news, right? I wanted to bring up this OPEC thing, because you guys want to pay attention to that too. That's why I said there's so much going on in the world. The International Energy Agency, delivered a stern warning today, saying that OPEC OPEC's decision to slash oil production could tip the global economy into a recession. That's very dangerous, and I also think that that's some news that you guys are going to want to hear. So make sure you guys are tuning in and paying close attention to that, and also as well as Joe Biden and everything going on with that, because you guys know there's a game of politics being played here. Saudi Arabia actually came out with a letter today basically saying that Biden called for us to delay us slashing oil production for 1 month so he could win the November election, which, let's be honest, guys, that's exactly what's happening. I mean, for crying out loud, we just had it come out a few days ago. Not a few days ago, I think yesterday, where Biden basically said, oh, there's no recession. It's not going to happen, blah, blah, blah. He's playing politics, guys. Lucky for Biden, most of the American population does not understand economics. So unfortunately, there's going to be a lot of people out there. Oh, the president said it. Oh, he must know what he's talking about. He's the president. He's right. Wrong. We're absolutely going to get a recession probably in 2023, whether the president wants to admit it or not. So that's what you guys got going on there. I think that's it in terms of the news. Yeah, this video is almost 10 minutes long now. So yeah, that'll be it, guys. Once again, do not fall for this bear market rally. The Fed is going to get a lot more aggressive. It's already being priced in. It's already being shown in the data. Like I said, there are two things you are going to want to watch. If you start to see these two things happen, then you know that we might be at the end of the Fed raising interest rates. And I'm here to tell you guys now, as long as the Fed continues to raise interest rates and get more aggressive, stocks are going to feel the pain. And all you're going to hear is me on YouTube saying my slogan, Mother She Wrote. All right, guys. So anyway, there you guys have it. That'll go ahead and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe. And I will see you guys in the next one.